Hi everyone, let's go over my bullish and bearish Elliott Wave scenarios on Bitcoin. Price moved to the upside and hit the 0.618 Fibonacci, which is important as it invalidates a 5-wave impulsive structure to the downside, as wave 4 is not allowed to hit the 0.618 taken from the high of 2 to the low of wave 3. Now this increases the probabilities that this is a 3-wave structure to the downside, which in turn increases the probabilities that sooner or later price will take out this high. When we look for an impulse to the downside here, we have to look for a truncated wave 5, where wave 5 ends higher than the low of wave 3. However, this is extremely rare, never gets the highest probabilities unless all of the other scenarios fail. If we look at scenarios towards the upside, it is actually quite difficult to look for a scenario, because here in an impulsive move where inside wave 3 as a subdegree count you have these 5 waves, wave 4 hit the 0.618 taken from the low of 2 to the high of 3, which would invalidate a wave 4. We can then look for a diagonal structure, but we're then looking for an expanding diagonal, which in general is rare as well, so therefore never preferred. And also for a contracting diagonal, wave 3 is longer than wave 1. It is allowed, it's not a rule, it's a guideline that wave 3 should not be longer than wave 1, but also there it lowers the probabilities and is not preferred. And if we look for a double 1-2 and a 1-2-1-2, then you can see the size of this second 1-2 is much larger than the first 1-2, which also therefore is not preferred. So it lowers the probabilities at the moment of immediate continuation, and therefore it's good to at least consider moves to the downside, where in this scenario over here, we are looking for a diagonal to the downside, where we then have a 3-wave move down, a 3-wave move up, and then an ABC. And then we're going to be looking for more 3-wave structures in an ending or leading diagonal. That is the question. This becomes an ending diagonal if we look for a wave A, B, and then a wave C, and then we want to see continuation to the upside. However, if we look for a wave A or 1, with this being the end of a bigger move to the upside, right, that started in the 20s, and this being the end of a wave 5, then we can have a leading diagonal and then a bigger A, B, C over here, or a 1, 2, and 3 to the downside. Now, the most bearish scenario would be that truncated fifth. Of course, as mentioned, low probabilities unless all the other stuff fails, but I do at least want to show you in a bit more detail, where here we are then looking for an ABC. 2 preferably is in at the 786, common target for 2. You got to be looking for a 3 to the downside, but that means you want to see impulsive structures from the high here to the downside. And when I open my micro folder, you will see that it looks very 3-wavy over here, which also lowers the probabilities of this scenario. Alternatively, we have a triangle scenario over here as well, where we are then looking for a bigger triangle to form and a bigger range between 46k and 40k for a bigger wave 4 or a wave Y in a WXY. However, wave Y will then be very, very long compared to wave W, which also does not really fit the probabilities. So then arguably looking for a bigger wave 4 here. And if I at least show a bullish scenario to the upside, then this is still an option where you have a diagonal structure here, but this is so early to call. The probabilities are not yet on the side of this scenario here. If we look at the range, then price continues to range in between these white boxes over here. We had a little bit of a move to the downside, but once we came back in, we moved to the lower end of the range, found support, and now we are at the higher end once more. If we can move above this white box over here and flip it to support, probabilities would increase to move to the upside, with this box sitting between 44k and 44.4k. Now, if we jump to the 5-minute time frame, then the move that we have from the high over here to the downside at the moment looks very much like a 3-wave structure in a potential A, B, C, where wave B retraced to the 3A2 taken from the high to the low of A, which is a common target for a wave B, rare for a wave 2, increasing the probabilities. This is a wave C to the downside, which therefore increases probabilities to eventually take this high over here. If we look at these CVD divergences, then with this drop to the downside, we do have bullish CVD divergences with the wick low over here. Now I say specifically wick low because CVD divergences with a big wick always have to be taken with a little bit of a grain of salt, I suppose the quote is, right? Because the probabilities are a bit less high for CVD divergences with big wicks, so that's something to keep in mind. More locally, we have a bit of a mix. We had some bullish CVD divergences. These already played out over here. Little bit of bearish CVD locally also already played out, but it continues to build. As you can see, we had bearish CVD here, lower high on price, higher high on CVD, both blue and yellow. Price moved to the downside, so these have played out. Comes back up, and price is still ranging above the yellow CVD line here. So we still have some bearish CVD divergences. However, we have a double top. High number 1, high number 2, which does increase also probabilities to take the highs at a given moment. So it's interesting to observe what happens locally. So if we then look at the probabilities of the different scenarios, then on the medium time frame, the probabilities are now higher for a move to the upside, because a truncated wave 5 in an impulse to the downside is extremely rare, never has the highest probabilities unless all of the other scenarios fail. On the low time frame, if we look more locally here, this move to the upside, then it's difficult to count a nice impulsive diagonal or double 1-2 scenario to the upside over here. In a double 1-2, you would be looking for a 1-2-1-2 continuation, but the second wave 1 and 2 are much bigger than the first 1 and 2, which also lowers the probability. So therefore, the probabilities increase of a 3-wave structure to the upside, which therefore increases probabilities to eventually take this low. We do, however, have bullish CVD divergences, and I never really enjoy going against those type of divergences, so it's something that I keep in the back of my mind. On the micro over here, more locally, the move to the downside looks like a 3-wave structure, so I have the probability set on neutral / upside question mark, because a double zigzag to the downside in a potential ABC correction ABC has lower probabilities than a single zigzag to the downside, and a potential double 1-2 here, 1-2-1-2, does not have the highest probabilities here at the moment. We do keep an eye, of course, on CVD locally, and if price can take this high, the bearish CVDs are invalidated. With all of these 3-wave structures, it is quite difficult to know exactly which scenario has the highest probability of playing out, so we have to remain patient and wait for more information to get a better idea of what scenario has the highest probability at the moment. I hope this video was helpful or valuable to you. Please check out the most recent educational video I've made about the best trading indicator you can use in my opinion, which is the CVD. And for now, thanks for watching and subscribing, and I'd like to see you at the next one. Bye bye.